This conference will now be recorded.
All right, good morning, everybody. My name is John Reed. I'm the owner of the Assure Group. We are the ones that developed the program HempGuard in conjunction with the guys at Conifer and Sycamore. Our background is we have about 200 years of insurance experience in our agency, a little over 150 years of actual farming experience as well. We have 2 offices in Peoria and 1 in Lafayette. We work with just over 3,000 farmers across the Midwest. And we've been doing custom program development now since 2012, and we've developed a little over 15 programs across 9 different crops. So we got started looking at the hemp side about a year and a half ago. We were called to develop a crop insurance program out of Colorado, primarily for hail, and we decided after looking at everything that we wanted to take it a step further and really deep dive into a multi-peril program. That's when we got connected with Nick and Joe and everybody at Conifer and Sycamore. So HempGuard is the product name. Sycamore Insurance Agency is the MGA, MGU of the program. And the Assure Group, we're the ones that are doing the underwriting and a lot of the program administration in conjunction with Sycamore. And Conifer is the issuing paper, and they will handle all the claims and paying of all the claims. So talking about hemp and crop insurance on a high level, there's a lot of different programs out there right now. You've got the federal program that's rolled out. You've got our HempGuard program. There's independent hail programs, and then there's weather insurance programs. Some of them where they cover one peril and some where they cover multiple perils or parametric style programs. There's really, in our opinion, the 2 top programs in the market to look at are the federal hemp policy, which is the yield guarantee from the federal program, and then the HempGuard program. A couple things on the federal side that there's quite a few negatives on the federal policy. I'm not going to spend a lot of time on this, but the first big one is on the federal policy, it does not give you any type of CBD protection. It only protects on your dry biomass. So you can have a good dry biomass and a terrible CBD level, and that policy is not going to help you in any form or fashion. You have to have a contract with a processor for the federal program, and that contract has to have a promise to buy, and it has to have a pricing mechanism attached to it. That's the big kicker right there, is every processor is happy to make a promise to buy, but they don't want to put any teeth to what they will actually pay right now. So getting a forward contract is extremely difficult to find on the market. And then the other big factor is, there's 2 other big factors. One, you have to have growing experience on the federal program, and it will not cover you at all if your plants go hot for any type of THC issue, weather related or not. So those are a couple of the red flags on the federal program. So let's jump into the HempGuard. So HempGuard, who's it designed for? HempGuard is really designed for, and only designed for, industrial hemp growers that are going to grow outside. Guys are looking to minimize their downside. HempGuard offers an actual dry biomass and a CBD protection, so it's specifically developed for guys that are growing for CBD. We have had some lenders that are starting to accept it and look at it as collateral for their operating notes. And then most importantly, these guys have a lot of at stake. You know, when you're talking about $5,000 to $15,000 an acre to grow the crop, and with no protection at all, we can offer them a little bit of peace of mind so they can feel a little bit more comfortable knowing that they're protected for that crop. So HempGuard, it's a multi-peril program. It is covering all the exact same perils that federal crop does. So it's going to give you weather protection. It protects you against insect damage, disease, quality, quite a few different factors like that. I'm getting a lot of feedback. I'm going to throw everyone on mute real quick, and then if you have any questions, you can just go into the chat function. Just a second here. All right, I think that's a lot better. So if you have a question, open up the chat function, and I'll be watching that if you have a question. Otherwise, I'll open it up to Q&A at the end also. So again, on the multi-peril coverage, we're covering everything from weather, insect, disease, quality. For a full breakdown, you can find it on page 7 of the actual policy language. But again, like I said, it's going to cover all the same perils that the federal crop does, including, wildlife damage, things along those, earthquakes, whatever's covered on federal is covered on our side. Things that are not covered or areas that we cannot write in, we won't write it in floodplains or anything that is rated as AAA or triple B ground through the USDA. Just like the federal program, we will not write it. A big thing to watch for is negligence and poor farming practices. We will put a lot of time into establishing what I would call minimum expected farming practices. So we can go into that on a different webinar if needed. We do not cover for any preventative plants. So what that means is if a grower is intending to plant, but say we have a really bad wet spring like the Midwest did last year, and they just physically can't plant the crop at all and they give up on it, there's no coverage or protection if for whatever money they've already invested into that season. There's no coverage for replant. So say a grower goes out, gets his transplants or his direct feed into the ground, he gets some heavy rains and there's some pooling or flooding in the field that kills off some of those plants, and he wants to replant it, we're not going to pay for any of that replant. A grower cannot just abandon their acres without company approval, and the only time we would approve them to abandon their acres is if something completely wiped out the entire field, like a horrific hailstorm. We do cover for cross-pollination, but where the pollination does not come into play is if the grower is just a lack of good farming and he does not take the time to pull the male plants. No matter what they buy for seed, whether it's some of the best feminized seed or feminized clones on the market, you're always going to have male plants. And if you're on 10 acres, you're probably going to have 100 to 150 potential male plants. So if we came out on a claim and we saw there was 150, 200 male plants in a fully feminized field during a claim, that's going to be a red flag for us if the grower did not actually put the time and the effort in to pull those plants out. There's always going to be plants that slip through, but it can't be on a mass scale like that. There is no protection for not being able to sell the crop. So if the market's tanked or their contract, or if their processor backs out of a contract, or they just don't have a contract and just can't sell it for whatever reason, that's not going to be something that we give them protection for. And we do not cover for the plant going hot per the state guidelines. Now the difference with us is if we get into September, they've set their harvest window, everything's going well, but then all of a sudden we get a 10-inch rain and the guy can't get in the field for 2 weeks, or we get 1.5 feet of snow and it just sits there and they can't harvest it. If it's a significant weather event that stops the farmer from physically being able to get into the field to harvest the crop, we will protect him in that situation. But what we're not willing to protect against is a guy that just says, you know what, I passed my state regulations, now I'm going to just let my field sit there and mature more. And then he goes to harvest it, and now all of a sudden he's at 0.6 THC, and he just let it go past what the legal limit was. We're not going to protect him in that situation on a claim. Again, the exclusions, you can find those on page 8 of the policy language as well. Something that's a little bit different from us from the federal program is the federal program will write anybody. You don't have to go through underwriting. It's just anybody can take it. We're a little bit different. We treat this like you would anything else that we're looking for good, secure risks, guys that are trying to do it right. So we do underwrite the policy. A couple of things we're going to look at, obviously their farming experience, what type of genetics they're using, what their plant spacing is going to be. A big one, a good one to automatically knock a guy out is we will only insure irrigated acres. Those irrigated acres, whether it's on sub-drip, drip tape, pivots, all those are acceptable. Even ditch irrigation is acceptable. The only key thing we really want to understand from the irrigation side, if they are irrigating, is what's the water source? Is it something, if a guy is saying, I'm just going to come by with a water truck and pump it on as needed, that's not going to be accepted. But if he's got access to water rights, a well, if he's got a little bit more of a sophisticated plan on how he's going to get water to the field, we will definitely look at those. A lot of these things that we're going to ask about is more of a think about as a checklist, kind of going through a preseason growing plan with a grower. We want to make sure that these guys know what it takes to be successful. We've seen a lot of farmers have success, and we've seen a lot of farmers fail over the last 2 years. So every single one of these pieces has been an area where guys have lack of planning has really devastated their crop, especially on the weed control side. Harvest and drying is a big deal. Now, keep in mind our plant are no longer covered the minute they harvest it. So we're not giving them protection when they're in drying. That has to go back onto their property casualty. We're only protecting it from the time that plant is transplanted into the field until the time in which that plant is harvested. So the plant's not covered during propagation with us, and it's not covered post-harvest with us. Something else that you need to be aware of is we do look closely at the seed genetics and where they're coming from. And the reason we look at that is the seed side is one of the main areas where there's so many scams and issues going on that we want to make sure that the genetics they're putting in the ground are coming from a reputable source and that they've been field proven. We've seen a lot of genetics come in an experimental basis in different areas and failed, where they maybe succeeded great in Colorado, but they failed miserably in Michigan or Illinois or Indiana. So we kind of look at that. We're not going to insure something that's coming in that's never been grown in that region. And we want to make sure it's coming from a reputable company. If he's buying the seeds from Joe Smith, we're going to want to know where Joe Smith get these seeds, who's he selling them for. So that's kind of the due diligence we want to do. If we find out they're reputable seeds, reputable company, no issues, we're happy to accept them. We just got to make sure we're not putting ourselves in a bad situation. I'm going to pause real quick here, unmute everybody, and see if anybody has any questions. Any questions right now?
No,
I
I'm
have
good.
a quick question. Is it just the cherry? When this first started coming out, it was just cherry wife and wine seeds that you guys would take. So that's changed then. I just want to confirm that they still have to be reputable seeds, but it's changed not just to those two.
Yeah, we're past just those two genetics. It's more important in our mind right now about what company they're getting from. 3 companies right out of the gate that we are very comfortable with. HGH, so High Grade Hemp Seed, they're a very good company. United Global Partners / Mystic Farms, they're a very good seed company. And the Hemp Mine out of the Carolinas is extremely good. We're open to looking at Oregon CBD as well. The issue we're finding with a lot of these seeds is that they're designed for smokable flower, and right now with the new THC rules and total THC, most of these genetics are going to immediately go hot once they get significant amount of CBD to them. So that's what we're really looking for, is making sure the grower has an opportunity to avoid going hot with good genetics.
Okay.
So what states do you offer this program in?
States? There's 20 states available. We have pardon? You asked about Missouri?
Yeah, I said there's Missouri one of them.
Yeah, Missouri's one. It's right off the top of my head: Washington, Oregon, Colorado, Missouri, Texas, Arizona, Illinois, Iowa, Indiana, Michigan, Wisconsin, Minnesota. I believe we're in Alabama, South Carolina, North Carolina.
Oklahoma?
I know I'm missing a few. We are not doing it in Oklahoma this year.
Okay.
We've got a FAQ sheet that I have that I'll get to Matt and Joe after this meeting, and they can forward it out to everybody. And it's got on there, it gives you a good breakdown of the coverages, and it definitely has the 20 states that we are working in this year.
Thank you.
Any other questions before I move on? All right, I'm going to remute everybody, and I'll run through these next group of slides. Okay, so a couple things when we get into it on the application. We do have a $500 application fee, and this is non-refundable. One of the reasons we did this is we've done a lot of program management on these types of things before, and we want to avoid, especially since it's a pilot program, we don't want to overload with guys that are just window shopping. We're looking for serious buyers only. So if you have lots of questions when you're working with a customer, feel free to get those questions to us. We'll answer them quickly. I'd rather take a lot of questions on the front side and help coach you guys up on what we're looking for more than just having a ton of applications coming through and bog us down too much. We do have a minimum premium. It is $5,000. Typically what we find is around 3 to 3.5 acres, maybe 4 acres is kind of where that balances out. So we don't have the minimum acreage is 1 acre, but again, if they only insure 1 acre, regardless of how much coverage they want, we're going to charge them $5,000 in premium. The policy, we have a sales close date essentially of April 1st. So the policy will become effective on April 1st or upon underwriting approval. Then the policy will expire either at the time the plant is harvested in the field or November 1st. So it'll be the earlier of the two. The final plant date, what this means is starting on June 15th, if they have not planted it, we do have a late planting window. Anything planted after June 15th has a slight reduction in their coverage. So technically, as long as they have up until July 1st to plant the crop. If they plant after July 1st, our coverage would not be effective. After planting, though, federal, that's a big difference between us and the federal program. I'll back up a second. Federal program basically lets guys plant up until almost August 1st. I know that's common in some areas, but we've also seen a significant reduction in yield the later these guys go after July 1st. That's why we're stopping our program at July 1st. Acreage reports, this is when the growers have to submit to us how many acres they planted and confirm that the genetics that they told us they were going to use or what they planted. That is due to us by July 20th. Something else to keep in mind is that if they submit to us that they're planting 50 acres on their application, they can only increase those acres by 10%. So in that case, we'd only let them insure up to 55 acres because we'll only let them go up 10% from the original application. The reason we have to do that is because it is a pilot program and we have premium and liability restrictions and caps with our reinsurers, so we can't come in and all of a sudden be at $2 million of premium in Illinois and then based off of acreage reporting end up at $3.5 million. That would get us in a lot of trouble and we want to avoid that. So something to keep in mind is if they say they went from 50 acres and ended up planting 75, however, even though we're only offering coverage on 55 acres, we're still going to look at the production on all 75 acres to apply towards that policy. So we want them to be as accurate as they can on the acres. There's no minimum on how far they go backwards. But we'd ask you, because we need to be very smart about this. And if a guy only intends to plant 10 acres, please don't submit an application and protect him at 30. Let's try to be as close on this as we can. Something else we've added that's a little bit different from what a federal program does is we're asking for an expected harvest report. This is something where all the growers are having to submit to the state a window in which they plan to harvest. When they submit that to the state, we're asking them to submit the same information to us, except we're asking them to submit in also what their estimated yield is at that time. Any grower, I got to double check this. I can't remember if it's either 120 acres or 150 acres, but any grower that's on 120 or 150 plus acres will be required to have an infield inspection during the season. So if it's a grower that we did not do an infield inspection with, we'll also ask them to submit in a picture of what their field looks like at the time of the harvest report. After acreage report's done, we have all that figured out. Any adjustments that have to occur on the bill will be set up, and all billing will be due by September 15th. Keep in mind this policy, in order for it to become effective, full premium has to be paid on the front side. We don't do any delayed billing. So you submit the $500 with the application, and then upon policy approval, they will have to pay for the full premium before that policy takes effect. Cancellation of the policies can be canceled up until or on or before March 15th. That was a $500 application fee, so they're going to lose that $500 fee regardless if they want to cancel. Now, if they bind with us and then they cancel, it could affect their ability to reapply with us in the future. If they'd be better off for them if they think they're not going to, if they end up not planting though because of a preventative plant situation, again, they would be refunded their premium minus the $500. So if the guy can't plant because of a weather situation, he's not going to be penalized except for his application fee. Claims, we ask guys to notify us within 72 hours of realizing the loss, but no later than 60 days after the policy expires. So whether that's 60 days after harvest or 60 days after November 1st, it depends on when they harvest. Policy application and underwriting. Again, currently all policies have to be submitted, applications have to be submitted prior to or by April 1st. Full application and the underwriting questions must come in completed. And again, 100% of the premium must be paid on or before April 1st. Underwriting approval will only be good for 7 days upon sending it back out. So as we get into those, we'll when we send our acceptance letter back out, we'll give them the terms of how soon they have to accept the offer and then submit in premium for us. So let's walk through what's a policy look like, how's it established. So policy example be as a grower can choose between $5,000 and $15,000 an acre of coverage in $1,000 increments. I think it really varies on what the grower's experience is. We're just going to plug in here, we're going to look at the grower's yield history. So a grower does need to supply to us what his CBD levels and yields were in the past, and it's going to have to be in a form of some type of a COA or something from his processor that he sold to, so we can actually prove how many pounds he grew on how many acres. We're setting the market price at $1.60 this year. Right now, I know the market price is a lot lower than that, but based off things that we're seeing and hearing, we anticipate that price to go up as a couple things in the market level out here over the next couple of months. So let's say a grower chooses $12,000 an acre of coverage. What we want to do is we got to back in to figure out at $1.60 and 10% CBD, how many pounds of biomass will it take for him to generate $12,000 an acre revenue. So the way we figure that out is you take 12,000 divided by, the way a price per pound is established is if you have a 10% CBD level, you're essentially taking the price per point of $1.60 times 10. If it was 11% CBD, then we take that at $1.60 times 11. So in this case, we took the $1.60 times 10, and based off of that, you'd have to produce 750 pounds of dry biomass. So what his guarantee would look like would be 750 pounds of dry biomass with a 10% CBD guarantee based off $1.60 per CBD mark point. That $1.60 will not fluctuate regardless of what the market does. Now, the nice part about this policy is that it will pay whether it's a biomass shortfall or a CBD fluctuation. So they're going to work together to determine what pays. So let's look at an example. So let's say on example one, he bought $12,000 an acre of coverage. He ended up producing 4% CBD with 1,200 pounds of dry biomass. The way that claim would work is we've got to back in to figure out what was his total harvested revenue. So we would take the 1,200 times his 4% CBD at $1.60 point, he would have produced $7,680 of harvest revenue. His guarantee was $12,000, so we'd subtract the $7,680 from it, and his per acre payment would be $4,320 per acre. Then we take that $4,320 an acre times however many acres insured to calculate his gross indemnity. Let's take a look at a different example. On example two, let's say the grower produced 11% CBD. He had a bad drought and he only produced 450 pounds of dry biomass. Say he still had his $12,000 an acre guarantee. Again, we've got to back in and figure out what his harvest revenue was. So his 450 pounds based off 11% CBD at $1.60 a point would be $7,920 of harvest revenue. Again, you subtract that $7,920 from his $12,000 an acre guarantee, produce a $4,080 an acre payment. Again, to get his gross indemnity, you take the $4,080 times however many acres he insured, and that would give you the total. I'll stop here real quick, unmute everybody, and see if there's any questions. Any questions on the coverage or the claim? Okay, no questions. I'm gonna keep moving then. So one other option we have available for guys is part of our underwriting when we look at things. We have a partner company called Whitefield Hemp. This company, if a grower has less than 2 to 3 years of growing experience in the hemp field, they would be required to have an approved consultant We have a couple of different companies that we are approved consultants across the country. But if somebody came to us and said they didn't have one, we would hook them up with Whitefield Hemp. These guys basically would focus on helping them come up with a preseason plan and offer any phone and infield season consulting if they needed it. This company also actually, if the guy's looking for genetics that would be approved, Whitefield Hemp sells the genetics for them, and they actually include the cost of the insurance in the cost of the seed or the seedling. So it actually turns it into a subsidized program for the insured, because they actually sell their seed and seedlings at the same retail cost as everybody else, just they include the insurance. So I just wanted to make that available. You can find these guys at whitefieldhemp.com. So this is my contact info. You can feel free to reach out to me at any time. I'm going to unmute everybody and I'll just open this up for whatever questions everybody has. No questions?
Hey, John, when you first started, you mentioned a cost per acre that you felt, was sort of, I can't remember if you said 5 to 10,000 per acre or 5 to 15.
Oh, for the growers' input costs?
Yeah. What number did you use? I'm curious.
Yeah, so realistically, inputs are going to be probably between $8,000 and $15,000 an acre for a grower this season. You'll get a handful of guys that can do it less than that, but not very many.
Right. Yeah, right. No, it makes sense if it's 2,000 plants at $4 a clone, there's $8,000 just for your plants, right?
Yes. Yeah, then you get the harvest and the drying and all the irrigation costs. It adds up very quickly.
Right. I guess the other issue then is pricing. Will you come in the sheet, the frequently asked questions?
Can you say that again?
Oh, the premium. I saw the payout part.
So the premium is going to vary. It varies by state. So a good way to Joe, do we have a quota set up yet inside of Sycamore for everybody? So the average rate is going to be about, if you're trying to do ballpark numbers, is about 12.5% of gross liability is the average number. Texas is a little bit higher, but Colorado and most of the states are running about 12.5% for about $10,000 an acre coverage.
So like the applications and everything for this program, are they on what website?
The Sycamore insurance site. If you click on the hemp page on the Sycamore site, there'll be a spot in there for submitting applications. And that's where you can download the full application and underwriting questions. And they also have it set up so you can make the application fee payment as well. In order for us to even put the policy into the queue, it would have to have the application fee received.
Hey, John, we're back. What was your question for Joe?
Do we have a quota set up for everybody yet?
No.
Okay.
What was that, John? Didn't hear.
I asked if we had a quota set up for guys to just run quotes off the rates.
And
we could have. We do not at this time. We could have it.
Okay.
By the end of the day.
But in the meantime, if somebody does need very specific quotes, email it to me and we can run some quotes for you very quickly. But the key is we do need to know, a big driver on what the quote is also what their historic dry biomass records are and their CBD, because that dictates quite a bit on the quote itself.
Right.
Hey, John, can you mute Jim? I think it's feedback from his feed.
Yep, muted. What other questions? I guess if you don't have questions on the program, are there other types of trainings that would help you guys that we could provide? I can record other webinars, so anything you guys are looking for to help you with this market, whether it's federal information, different things like that, please share that with us, and we can work on those trainings as well.
Okay.
I think comparing to the federal would be good, or just more information on that. Are the apps pretty simple to fill out? I mean, self-explanatory?
Yes. Yeah, and if you have questions on that, reach out to us, and we could work on trying to do something to walk people through that as well.
We'll provide a link after the call too, with a link to the application page and the application in general. So we'll get that out to everybody.
Okay. I just want to make sure everybody, like you guys, have all the things you need up front, since we're on a short timeline with this. So.
Yeah, real short.
Yeah, I just wanted to make sure they were easy and user-friendly, I guess.
I guess that's it.
Yeah, if there's no other questions, I appreciate everybody's time, and we'll work out an area for you guys to quickly and easily submit in questions to us as well, and we'll make this webinar available for anybody if they want to watch it again.
Thanks, John.
All right,
Thanks,
thanks,
John.
guys.
Appreciate
Have a
it.
good day. You're welcome.